Have you heard of Parent Plus loans? Have you also heard that there are some major pros and major cons of Parent Plus loans? So if you're an undergraduate student or the parent of an undergrad student, this show's for you. Hello everyone and welcome back to our show, Ask Abby. I'm Abby and we have another Friday special for you today because we are finishing up our latest series, which was on student loans. So this is a huge topic for you today, and whether or not you're just going into your undergraduate college phase or you're already there and you're just figuring out loans now, that's okay. We've got lots of things to talk about today, and if you have questions about Parent Plus loans or student loans in general, today is the day to ask. We have a great show. We've got lots of answers for you, and we're just talking about Parent Plus loans because they're kind of confusing, right? So there's a lot of nitty-gritty details when it comes to Parent Plus loans and some major cons you need to know about before you take them out. There are, of course, benefits as well, and we're going to talk about all of that today. So what are Parent Plus loans? When should you take them out? And we are going to get into all of that. So first things first, answering the question, just basic. What is a Parent Plus loan? It's a federal loan, so it's not private, it's federal, that parents of undergraduate students can take out to help their kids pay for school. To get the loan, the school has to participate in the direct loan program, and you also have to go through the FAFSA process. So you've probably already gotten that far. Whether or not you know you can take out a Parent Plus loan, you've probably gotten to that point. Now the question is, should you? There are some other criteria that we're going to talk about before we get there. So for example, credit history does come into play when it comes to Parent Plus loans. Why? Because you can take out a lot of money with Parent Plus loans. So they want to make sure that your parents are financially responsible and in a good spot to pay them back. So what does it mean that they have to have a decent credit history? It means you can't have any late payments over 90 days on accounts with a balance of more than about $2,000, just a little over $2,000. And you haven't gone through bankruptcy, a repossession, foreclosure, any sort of wage garnishment, had default or charged off accounts, or a tax lien in the last 5 years. You can't have any of that in the last 5 years for your parents to take out, or for you parents to take out a Parent Plus loan. That said, if you do have one of these flags on your credit report, that's okay. It doesn't mean that you can't get a Parent Plus loan and that you can't help your kids pay for school. It just means that you need to have an endorser, which is kind of like a co-signer. It basically says, I'm gonna get an endorser with good credit history. It's basically saying there's two of us that are promising we'll pay back these loans. So that's the way to get around some of those flags. If you have those negative flags on your credit report, it's okay, it's still possible. Now, to go through the endorsement process, you also have to go through credit counseling that the federal government offers, basically. It's only about a 20 to 30 minute course. It's all online. You have to go through it to go through that endorsement process. If you have more questions about that, feel free to throw them in the comment bar and I can either point you in the right direction or answer them for you today. So now let's talk a little bit about interest rates and Parent Plus loans. The interest rate for these loans, they change year after year, but it's a fixed rate for a full year, and then when you take out the loans for that rate in the year, it's that interest rate for the life of the loan. So for example, the interest rate this year is 5.3% for Parent Plus loans. So if you take out a Parent Plus loan between now and July of 2021, your interest rate will be 5.3% for the life of the loan. Whether it takes you 12 years, 10 years, 25 years to pay these guys off, your interest rate stays the same. So that's kind of a good thing. We're going to talk a little bit more about that. So That's a 5.3% interest rate unless something crazy happens, like the COVID-19 pandemic, and all of the interest rates for federal student loans right now are actually zero. So that's kind of a nitty-gritty detail that under certain circumstances can happen. Otherwise, that interest rate will stay around that 5.3% mark. And it goes up and down every year. For example, the 2019 school year, it was somewhere around 7%. So it's actually interesting it went down this year, similarly to some other interest rates we've seen, like mortgage rates and things like that. So another simple qualifier is that, students, you have to be enrolled half-time to get a Parent Plus loan. That's easy enough, right? So let's quickly chat through some major bullet points for these loans, like who's responsible for paying them and who's responsible for paying them back, and when does repayment start, et cetera, et cetera, et cetera. So let's talk about just some major bullet points real quick. First question, who's responsible for paying them back? The loan technically is under the parent's name. So the parents, hi Tim, you are responsible for paying these loans back unless you decide to refinance and change the name to your child's name. Now, if you do refinance, you're going to be refinancing under a private lender. You basically take out a new loan with a private lender and and then you pay off your federal loans and you have that new loan. So that new loan can be under your name, it can be under your child's name. You can figure that out, both of your names, but that's how you would do that. So if you're curious about refinancing, we did a show on refinancing, and I'm going to put that link in the comment bar so that you can check it out. Who, what, when, where, why, all those questions on how to refinance. That is what we talked about in the link I just put in the comment bar. Let me just title it real quick so that you know exactly what you're looking at. So yeah, if you're at that point where you're like, I'm ready to refinance, whether that's to get a better interest rate, to lower your monthly payments, or to switch names, if it's under your name and you'd like it to be under your child's name, vice versa, whatever the case may be, this is how you go about refinancing. So that's super important. So parents, this is your loan. It's your responsibility to pay it back. When do you have to pay it back? This is a key factor and can sometimes be a con when you're thinking about Parent Plus loans. As soon as the funds have been dispersed to your child or your child's school, that's when payments start. So unlike some other types of federal loans, these payments are not deferred until graduation. So you'll get info on repayment from your loan servicer as soon as that payment's dispersed. So that's kind of, you just make sure that you know that. So now that we've got some of the basics out of the way, let's dive into pros and cons. I think you probably have a pretty good idea of what we're talking about here, but I just want to dive into a couple specific highlights for specific pros and specific cons of these loans so that you know exactly what you're getting into. One of the biggest pros of this Parent Plus loan is that you can take out as much as you need up to the amount of the full tuition of school, minus any other federal aid you get. So if your school tuition is $30,000 a year, you get $10,000 in other aid, and you have $20,000 remaining, you can take out a $20,000 Parent Plus loan to pay for the rest. So that's good news, and it's only one application process. You can get the rest of that all taken care of, right? So that's kind of positive, and that makes it really easy when you need to pay for school in one application process. But there's a con that goes along with that, which is, like I said, repayment doesn't start after graduation. It starts as soon as disbursement goes out. So the bigger the loan, the higher your monthly payment you're looking at pretty much right away. So what's my advice? If you have the option to take out any other federal aid, take it. So there's options for grants, there's options for other types of loans outside of Parent Plus loans that are dispersed, and then you don't have to start repayment until after graduation. My advice, look for those loans first. If you have to take out loans, check those out. Make Parent Plus loans the last resort for federal aid. Private aid's a little bit different. We're going to dive in a little bit to that today. But let's talk about another pro of Parent Plus loans, and that is the pro is that it's a federal loan, not a private loan, which means that you have more repayment options and assistance if you need it. Plus, for example, when COVID-19 pandemic makes the economy go all whack, you can get the benefits that the government put in place, like the CARES Act that delayed student loan payments until September 30th with 0% interest. That's something that only happened for federal loans. Because a federal Parent Plus loan is a federal loan, you get that benefit. If you were to take out private loans to get that remainder that you need to pay for school or your child's school, you wouldn't necessarily get that same relief. So because it's a federal loan, you get those repayment and federal benefits. But there's also a couple other things. So there are a few different types of repayment. So there's the standard repayment, which is 10 years, and that's just a fixed monthly payment. There's also the graduated repayment option, which means you pay less now and then every year a little bit more over the life of the loan for 10 years until it's paid off. And then there's another option to extend your repayment to 25 years, which would lower your monthly payments obviously drastically. So that's called the extended standard. And then there's one other one, which is called the income contingent repayment, which means you would basically what you do is from the start, you'd consolidate your Parent Plus loan into a direct consolidation loan through the government. So that's kind of cool. And then that would allow you to pay either 20% of your income or what you'd pay on a 12-year plan, whichever one's less. So if 20% of your income makes your payment less or 12-year payment program is less, that's what you pay with an income contingent repayment plan. You do have to refi for that though, but it's a government loan that you're refinancing with, so that's good news. In the case of private student loans, you usually just have a standard fixed monthly payment. So you're kind of stuck with that, right? Unless you refinance, get a new lender, or refinance with your current servicer or something like that, you're pretty much stuck with that refinance or with that interest rate and with that monthly payment. A con to all that with the pro is the interest rate itself, right? So we said the interest rate for this year, for example, is 5.3% for Parent Plus loans, and it'll stay that way for the life of the loan. But that's not necessarily the lowest interest rate you can get. There are a lot of times, if you have good credit, where you can go to a private lender, and if you're in a financially stable position, you can go to a private lender and get an interest rate of 2%, 3%, something significantly less. So you could, in theory, get a better deal. And if you don't foresee, it's hard to foresee something, especially that impacted the economy, which no one expected the COVID-19 pandemic to impact the economy in the way that it did. So it's hard to expect those types of things, but if you're financially stable, you have good credit, you might be able to get an interest rate that's lower than what you could get with a Parent Plus loan. So that's a con, is that that interest rate is fixed regardless of your credit. Parent Plus loans, another con real quick that kind of goes along with that, they also have an origination fee, which basically means they take out a percentage of your loan prior to disbursement. So right now it's somewhere around 4% that they take out prior to disbursement, and it's just a fee. They keep it, you don't get it, you just pay it up front. And a lot of private lenders don't do that. So something to think about there. There's a lot to consider. We've talked about a lot of things today. There's a lot to consider. Just to highlight some of it for you, pros of Parent Plus loans, it's a fixed interest rate. It's a federal loan, which gives you some extra repayment options. And the repayment options, there's multiple of them. A couple cons that we talked about is that it is a fixed interest rate, which means regardless of your credit, good or bad, that's your interest rate, period. Another con is that repayment starts right away, not after graduation. Repayment starts as soon as those loans are dispersed. And lastly, they take out an origination fee that private lenders often don't. So a lot to consider, and if you need help navigating the world of student loans, ask me questions on Facebook, email me at askabby@creditandebt.org, or call our coaches. They can help you navigate through it. They can get you connected with a student loan expert that'll even help you, if you have federal loans, go through the process of, hey, what options are out there for me if I have federal student loans and I need some repayment assistance, maybe even forgiveness, so give them a call. So make sure also go back and watch my other videos. We've done an entire series on student loans talking about everything from refinance, building your credit while in college, and even tips if you are in trouble and you can't make your student loan payment because of COVID-19. We've talked about all sorts of stuff, so make sure go back and watch my other videos if you have questions. Plus, you guys, be sure to like our page and opt in for live notifications. When we go live, you'll get a notification because there's a new stimulus bill and there's some crazy information out there about when aid is coming, when the bill's going to become law, when is the president going to sign it, what's exactly in there. So we are keeping up on that for you. You don't have to rummage through headlines and read a bunch of stories. Just like our page and we'll give you all the information you need. So there's stuff in there potentially that might get you another $1,200 stimulus check. There's stuff in there. There's even talk outside of the stimulus bill, but talk about student loan deferment, extending that was in the CARES Act. So there's talk about all this. So I will keep an eye out. Just opt in for notifications when we go live and you will be able to watch instead of read and shuffle through headlines, which is awesome. That's it for today's show. And that also finishes up our student loan series. If you have questions about student loans that I didn't get answered, please don't hesitate to ask. I'm always here for you. Our coaches are always here for you. We will start a brand new series next week, and make sure you keep an eye out because we're also launching our website, our brand new tools on in our financial platform on our website. So keep an eye out for both of those things. Thank you so much for tuning in, and we'll see you next week on Ask Abby.